Hello traders, Gary Wagner here. It is Friday, finally approximately 2 o'clock in Honolulu, the 21st day of October, and this is the daily report for gold and silver, our weekend review. Traders, I'm very pleased to announce that we have gone ahead and combined both the gold and the silver forecasts into one report. It will allow us to give you a more comprehensive view, to tie a couple of things together, and also to bring in a couple of markets that I believe have a vast influence on the precious metals markets as a whole. Now, as these markets round up and finish up on the week, we did have lower closes week-wide with both gold and silver and the dollar index. We had a strong finish today, however, up over $20 in the gold market, which closed at 1642.40 basis spot or cash. Cash silver closed up about 80 cents, 31.38. As you can see, we had a very, very strong showing in the Standard & Poor's, the equities markets. That closing in terms of the S&P 500 at 1238.25. We had the dollar finish near the lows of the week, selling off drastically after a 3-week decline. We have a continuation of that. Traders, there can be no doubt, this has been a very interesting week. To recap the trades, if we recall, we entered our last trade. This was back on October the 5th, and as you can see on October the 5th, it was trading roughly 1642. We entered the trade there. The market did move higher, as a matter of fact, moving up to a high on the 12th of 89 and then kind of settling back down. On the 17th, however, we did exit the trade and we got out of that trade at roughly 1672. So right around the open to mid-range of the market. But we also had a 1625 put option. I did expect that to expire worthless. But traders, we actually got very lucky because as you can see, after we covered this position roughly in this area, this is the 17th and the 18th, 1671, the market for the next 3 days pretty much came straight down. We were able to get out as that 1625 went into the money. So traders, the big question as far as gold goes is where do we see it going through November? Well, it's my current belief that we are in a corrective phase. When you consider that this major rise that we saw in the gold market propelled us to a top, this top being 1920, 1921, we then went into a basic A, B, C correction. My belief is that we are currently in wave B. Wave A concluded, this is back towards the end of September, and you will typically get on your A 5 count. 1, 2, 3, 4, and our conclusion 5. From there, you will get what is known as a standard ABC found within the B wave. That's this area here, and that's where we're currently trading in. My belief is that we completed our A and our B, and we are now headed into the final C component of this B wave. Now, where will that take us? On a typical market, and everybody knows gold isn't all that typical, but we should be able to expect this market to rise anywhere between 50 and 75% of the corrective price move to the downside that we saw in our A. Therefore, I believe at minimum, this wave right now should take us well over 1700 to about 1728. On the upper end is going to be around 1800. This next month, I personally believe we will see this market move $50 to $60 higher at minimum, back above $1,700 per ounce. Traders, so what is our current sentiment on silver? I first have to tell you I'm definitely not as optimistic overall on the silver market as I am in gold. And with the central focus of traders right now on the European Union and the two meetings that are going to be held by the leaders and policymakers in which they will attempt to come to odds with the major debt crisis that they have and the banking issues that will come up as they try to bail Greece out and some of the other countries. There can be no doubt that these meetings are critical because the eyes of the world right now are on the European Union, and the economies globally are really taking a key focus on what happens over the next 7 to 10 days. Because of that, my sentiment is that the precious metals that are aligned heavily with industry, such as platinum, silver, and palladium, will not fare as well as they ferret out these difficulties that they have. When we take a look at the marketplace itself, we did pull profits on our trade, but that trade was very, very hard money at best. We're in at 3025. We were out at 3175. But as you can see, there wasn't much of a real range to work with over this last trading week. And as a matter of fact, yesterday the market broke down so hard that it actually touched below $30 per ounce. Now, what am I looking at in terms of critical areas in the silver market, and where do I think it's going to go? Traders, to give you an idea of different targets that I'm looking at, I've put up two basic Fibonacci retracements, and they are from different time cycles. The first one is from the beginning of the February rally all the way to our current second highest close, which is just below $50 per ounce. Our second is from when the market traded back up to $44 and retraced down to $25. You can see these lines represent the longer of the two, and this our most recent set of corrections. Here's what I'm finding interesting. When we take a look at how this market sold off, the bare minimum, this is a 76% retracement. It's reversed, so look at it as 23% is left. It's gone 23% off of the bottom here. To me, 3022 is an absolute line in the sand in terms of a critical area that silver, if it's going to have any kind of bullish run, must, and I repeat, must remain above that. The target that I really feel is important, and this is where I always talk about that 3185. 3185 is coming as this 76% retracement from our large move when we consider the move that we saw as the market went from this low up to our record top at 50. You can see that the market's traded between these ranges, 3288 and 3022. You can see that they're lining up very, very well. My sentiment is this: if the market can find support in this area, our next real target, 3185, it's got to take that out, and then we're looking at a market that has a potential to go almost to 33. My sentiment was anywhere between $33 and $34 per ounce, 3288 being a 61% retracement from this last correction. You also get, when we consider lining these areas up, you can see where this support is now resistance in this area. But traders, if it cannot form a base above 3185 and it takes another stab to the downside, my sentiment is we might see silver go and retest these areas of $26. I personally don't think that that is the likely scenario. My sentiment is that what we should be looking at this point is a building of a solid base. If we can make it through this first target or level of resistance, 3185, it's absolutely critical. And if we can do that, we should have clear sailing up to about $33 per ounce. This has been Gary Wagner, wishing you, as always, good trading. Have a great week. We'll talk to you on Monday for another daily update and review. Bye-bye.